June 28th, Friday, so welcome to Bitcoin TV's channel. So how is the blockchain industry? I'm Zu, and this is a 24-hour headline sponsored by DeepCoin. Starting this Tuesday, Bitcoin spot ETFs have shown a trend of net inflows for 3 consecutive days, which is a positive trend. The market seems to have found a balanced sentiment point around 62,000. As of yesterday, the 9 US Bitcoin ETFs have reduced the holdings by 548 Bitcoins in total. Grayscale reduced the holdings by 500 coins and currently holds 275,000 Bitcoins, worth about $17 billion. So Fidelity increased the holdings by 262 coins, holding a total of 167,000 Bitcoins, worth about $10 billion. The trading volume of Bitcoin spot ETFs has rebounded slightly in the past week, but after the rebound, there has been a significant downward trend. On Monday, it was still at a high trading volume of 2.9 billion, but by Wednesday, it fell back to 900 million. A significant decline. In the short term, 60,000 is a key support level, while 64,000 is a minor resistance level. Over the past week, Bitcoin has continued to decline, with trading volume during US market hours showing a clear decline, while trading volume during European and Asian market hours has significantly increased. Apart from important macroeconomic data and events, the main trading sessions in the market are now concentrated in Asian and European sessions, with investors mainly from Asia and Europe. US investors' enthusiasm for the crypto market is at a relatively low level in the short term, and has continued to decline over the past week. Bitcoin at 60,000 seems to be not very cost-effective for US investors. With the decrease in trading volume during US market hours, the overall market trading volume has also shown a downward trend. Retail investors' trading sentiment often changes with news and market dynamics. At this stage, the market is gradually moving towards a balanced state of competition. The rainbow chart, which has advanced bubble trend predictions, historically shows that every Bitcoin high touches the brightest orange-red area of the rainbow. Based on historical trends, Bitcoin is now in a relatively undervalued range, and below 64,000 is considered a buying zone. Compared to historical trends, the market is now in a small bull market position. However, compared to the historical inflation high, the current value of Bitcoin still has great potential. Can the 70,000 for 3 years ago be compared to the 70,000 now? Obviously no. So Bitcoin in 2025 will naturally not be constrained by the current 70,000 historical high. With the approval of spot ETFs and future Fed rate cuts and liquidity injection, funds will flow back into the financial market on a large scale, and the crypto market will usher in a new peak at that time. Alright, please like and follow us. We'll help you sort out the news closest to money in the crypto industry, blockchain industry, and the mining industry in the past 24 hours. 8 institutions launched spot Bitcoin ETFs in January this year, which was the culmination of a 10-year struggle with the regulator. So far, the total size of spot Bitcoin ETFs is about 58 billion, hailed as one of the most successful new types of ETFs. Currently, BlackRock's iShares Bitcoin Trust Fund (IBIT) has become the world's largest Bitcoin fund, with total assets reaching nearly 20 billion since its listing in the US at the beginning of this year. Data shows that the IBIT ETF held Bitcoin worth about 19 billion on Tuesday, surpassing GBTC's 19.65 billion. The third largest ETF is Fidelity Investments spot Bitcoin ETF with a size of 11.1 billion. BlackRock has suddenly become the big winner of ETFs.
In documents submitted to the U.S. Securities and Exchange Commission on June 27th, BlackRock's Global Allocation Fund disclosed that the fund holds 43,000 shares of IBIT. Previously, BlackRock submitted 2 documents on May 28th, disclosing Bitcoin exposure in its Strategic Global Bond Fund and Strategic Income Opportunities portfolio. BlackRock's official spot Bitcoin ETF data shows that as of now, IBIT's market value has reached $18.5 billion, with holdings still at 305,612 BTC. Meanwhile, BlackRock stated that Bitcoin is an emerging asset that investors use to hedge against geopolitical uncertainty.
I think this is one of the most important questions for investors that are considering digital assets. The reality is, as you know, Bitcoin is a nascent asset. It's only 1/10 of the size of the gold market, and therefore it has high volatility and behaves a bit differently than stocks and bonds. A lot of investors look at it as a potential hedge against geopolitical and monetary risks.
In fact, BlackRock has been interested in the crypto industry and blockchain technology for the past few years, but there were many challenges at the time. First, the market volatility was relatively high, and secondly, there was a lack of reasonable regulation, and market rules had not been fully established. Moreover, for the past 10 years, the SEC has consistently rejected spot Bitcoin ETF applications out of concern for market manipulation, so no significant moves were made. Since BlackRock submitted its spot Bitcoin ETF application, the market has started an active celebration mode with prices. Bitcoin broke through 30,000 and 40,000 in October 2023 and directly stood at 45,000 after the application was approved. It may be because they recognize that the demand and adoption of cryptocurrencies by institutional investors, retail investors, governments, and enterprises are constantly growing. BlackRock's interest in cryptocurrency is no longer limited to following trends or making a speculative bet, but as a strategic long-term vision. It can be foreseen that in the future crypto field, BlackRock's presence will be inevitable. After the approval of Ethereum spot ETFs, Geoffrey Kendrick, head of Forex and digital asset research at Standard Chartered Bank, stated that the approval of Ethereum ETFs suggests that ETH and similar tokens are not viewed as securities by the SEC. Given that the core technology in multiple cases is very similar to ETH, it would be difficult for the SEC to claim their securities, and other cryptocurrency ETFs may be approved in 2025. Moreover, as Ethereum's final timing is expected to be in early July, the topic of which cryptocurrency will be the next to get spot ETF approval has heated up again. So we're sure everyone already knows that the next hot topic is Solana.
Just yesterday, asset management giant VanEck confirmed that it has submitted a Solana fund application to the US SEC to issue common shares with equity rights, and is expected to be listed on the CBOE BZX exchange, subject to issuance notice. In response, Matthew Siegel, head of digital asset research at VanEck, posted on X that the functionality of the native token SOL is similar to other digital commodities such as Bitcoin and Ethereum, so they applied for a Solana ETF. Stimulated by this news last night, SOL briefly surged 8%, breaking through $150 and is currently fluctuating around $147.79.
But when you step back, you have ETFs unlocking institutional capital. You have Washington going from being very much against crypto to being neutral to positive. You have new use cases emerging. You have technological improvements. You have it being mentioned at presidential debates. It's just amazing how far we've come. And that's a lot of positive catalysts to look forward to.
Regarding VanEck's application, Bloomberg analyst James Safar said the first SOL ETF application in the US has appeared. Whether we'll see other issuers immediately follow suit is worth pondering. The current preliminary thought is that this ETF might be launched if we have a new government and Securities Exchange Commission in 2025. Even so, there is no guarantee. At about the same time, Evgeny Gavoy, founder of cryptocurrency market maker Wintermute, also believes that the chance of SOL ETF approval this year is almost zero. So, do you think Solana's ETF has a chance this year? Speaking of the US Securities and Exchange Commission, SEC, everyone's reaction is more or less a bit touchy because SEC is now investigating a disproportionate amount of time and money to sue crypto companies big and small, and can be said to be the public enemy of the entire crypto world. Although we often see SEC suing someone, there are always some tough characters willing to hard fight with the SEC. In February 2022, the world's richest man, Musk, sued SEC in court on the grounds of endless investigation and harassment, but it was eventually dismissed by the judge due to insufficient evidence. In April this year, crypto giant Consensus sued SEC over Ethereum regulation, accusing SEC of overregulation. 2 months after this incident, Coinbase, which already has fighting experience with regulatory agencies like SEC, sued both SEC and the Federal Deposit Insurance Corporation (FDIC). So let's take a look.
The holding company of Japanese cryptocurrency exchange Bitflyer recently officially announced the acquisition and subsequent rebranding of FTX Japan. After the acquisition, FTX Japan's core business plan will shift from operating a cryptocurrency exchange to institutional-level cryptocurrency custody services. In the announcement, Bitflyer mentioned that the acquired platform aims to provide services related to cryptocurrency exchange-traded funds, ETFs, which have not yet been launched in Japan. However, if Japan approves spot crypto asset ETFs,
we never seek litigation, but it seems in this case that they have initiated it. And if we need to get the courts to get the clarity that we need, then we're very prepared to do that. I think the law is on our side, and the SEC has to follow rule of law. I think their actions would not be sympathetic to a jury. And so we're very prepared for this. We're going to court to win, just to be clear. I think we have a very strong case, and that's exactly what we intend to do.
In the current trend of tightening regulation, both companies and investors are closely watching regulatory developments, and Coinbase, which has successfully gone public, has become the current weather vane of the crypto field. Interestingly, Coinbase went public on Nasdaq in April 2021, claiming to be the only listed compliant cryptocurrency exchange platform in the US. Gary Gensler also took office as SEC chairman in 2021. Perhaps the dispute started from that time, and we think SEC's cases against Binance and Coinbase may go in completely different directions. Otherwise, how come CZ Zhao is already in jail when Brian Armstrong is still jumping around outside? As a leader in the AI sector, Worldcoin can be said to be a highly topical project. It was born with a silver spoon created single-handedly by OpenAI boss Sam Altman. After its birth, WLD was quickly listed on mainstream exchanges like Binance and Coinbase. The offline iris scanning has attracted countless people to participate. Of course, WLD's price has also been quite dramatic, rising from less than $1 to $12 in just a few months. All of this is due to the project team's continuous ecosystem building after founding Worldcoin. Last summer, Worldcoin was all the rage as the project's co-founders claimed that people were registering on average every 8 seconds. To push the project back into public consciousness, the Worldcoin Foundation launched a grant program allocating WLD tokens worth $830,000 to fund projects, one of which is the cross-chain protocol, Wormhole.
Wormhole's goal now is to enable Solana-based protocols to verify world IDs of users initially verified on Ethereum. To achieve this, a new Solana smart contract will utilize Wormhole queries, a cross-chain data retrieval service. Meanwhile, Worldcoin recently announced the first batch of recipients for the Worldcoin Community Grant Program on its official blog, with the first batch including more than a dozen recipients. Currently, the Worldcoin token WLD is priced at $2.78 with a circulating market cap of $715 million. Compared to its all-time high, it has dropped by 77%.
As a leader in the AI sector, iris scanning can bring long-term buzz to Worldcoin. Coupled with founder Sam Altman's ambition, we have reason to believe it won't be like ordinary altcoins that struggle after experiencing a bull and bear cycle, but rather has a huge potential in the long term. However, if we look at WLD's circulation rate, it's only 0.03%. In other words, 99% is still in an unlocked state. Once there's an even bit of selling pressure, WLD could drop dramatically, because WLD is a good token with topics and stories, but it's not worth buying in the short term.